Now, just as of recently, I've been devoting a decent portion of my overall cash balance on a consistent basis to invest into several different higher yielding dividend paying ETFs, which subsequently have been making my total monthly dividend income skyrocket just as of recent. And for more context, I'm inching closer and closer to $7,000 per month in dividends, which is outstanding. Now, these higher than average yielding ETFs are not only safe as far as not decaying like crazy over time, and on top of that offering more than a total positive return long term, but every single one of these ETFs, like I said, pay a ton of dividends, which is helping me substantially. Now, in the spirit of spreading the word, I'm going to share with you all three of the ETFs that I've been buying consistently as of recently, and like I said, these ETFs have been helping me as far as my strategy like crazy. So if you want to see which three ETFs have been skyrocketing my dividend income consistently, make sure to stick around, drop a link down below, and let's get right into it. I have some huge news for those ready to get serious about their dividend investing journey. I'm opening just 5 spots for one-on-one investing mentorship from me. I am a self-made 7-figure dividend investor who earns just shy of $7,000 per month in dividends at 31 years old. With this mentorship, you'll receive things like stock ideas, stock alerts when I buy and sell positions, access to my entire portfolio in real time, and I'm even more than happy to review your portfolio. You'll also receive my custom dividend tracker and A to Z dividend investing ebook for absolutely free. Like I said, this is only for 5 investors ready to take action, so don't miss out. Now, I'm going to be going through these ETFs in order from the ETF that I've been buying the most of to the least of, but I have been buying some of all these ETFs consistently over the last few months, and like I said, my total monthly dividend income is substantially higher because of it. The first dividend paying ETF that I've been buying like crazy is none other than SPYI, or the NEOS S&P 500 High Income ETF. Now let's dig a little bit deeper into this ETF, talk about how this ETF works, etc. It says right here, number 1, the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven cover call option strategy. So very similar to other cover call funds out there. In this case, we're talking about the constituents of the S&P 500 index, which of course are great holdings. I don't think any of us would really have any problem with having more exposure to the S&P 500. And then on top of that, the fund manager uses cover calls to, of course, generate premium, which is paid out in the form of dividends. But that's not all this ETF offers. Listen closely. It says actively managed by NEOS, the fund takes advantage of tax loss harvesting opportunities, in addition to utilizing SPX index options, classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. Now take my word for it, as you build your portfolio over time, and I'm sure a lot of you are already very aware of this, you're going to want to think about taxes because, of course, as you start to generate a ton of dividend income, for example, they might not be taxed very favorably. Now, number 3, this is also one of my favorite parts about this ETF, and this is another reason why I really decided on going a little bit bigger in this ETF moving forward. It says the fund utilizes a call option strategy. Not selling options, but buying call options that may include both sold and purchased SPX index options, which may provide the opportunity for upside capture in rising equity markets. So one of the main problems with a lot of these different cover call ETFs is that when you sell a cover call, your upside is basically capped. If the underlying moves up very quickly, you're not going to be exposed to all the upside. But with SPYI, because at times they are also buying call options of things like SPX, that means that if and when the market turns bullish, you're going to have potential exposure to the upside taking place in the market. Now, looking at their most recent distributions, at least for 2024, when it comes to SPYI so far this year has paid out around 49 cents, more or less consistently, with the most recent dividend payouts almost 51 cents, which is the largest dividend that we've received up until this point this year from SPYI. Now, what's crazy is that on a trailing 12-month yield, this is around 11.74%. So even other covered call style ETFs across the market, things like JEP or JEPQ, almost nothing can keep up with SPYI. But it's not only the massive dividends that SPYI has been paying over the last year. Year to date, at least, this ETF is up around 2.2%. So this ETF most likely is never going to grow like crazy. It's only up around 2% in the max time frame. I'm not necessarily expecting this ETF to see too much upside, although because of the strategy and because of the implementation of potentially even buying S&P 500 call options, I do think there is some upside. But even if this ETF trades sideways and pays a consistent 12% in a tax efficient manner, I'm totally fine with that. I'm team SPYI all day. The next ETF that I still have been grabbing more shares of consistently, not necessarily as many shares of that compared to SPYI, but still consistently been grabbing more shares of SVOL, or the Simplified Volatility Premium ETF. Now, looking at SVOL's distributions historically, so far this year, more or less, there's been a consistent 30-cent dividend or distribution, I guess, paid to investors, which is not bad whatsoever, especially for an ETF that costs around $22 per share. Along with that, SVOL, at least so far as year to date, has mostly traded sideways. It is actually in the red a tad, 2.15%, so you never really want to see a massive price decay. And although long term, the max time frame, SVOL is down around 13%, which again is not ideal, but with a 16-17% trailing 12-month dividend yield, even if SVOL, let's say, decays 1% per year, 2% per year, and pays a consistent 16 or 17%, long term, I'm not necessarily going to be too upset. Now, the counter argument to that, of course, is that you don't really want anything in your portfolio that's going to be decaying long term. I get it, income investors invest in things like these and then reinvest part of the dividend into more shares of it to lower your cost basis. There's a whole strategy involved, I totally understand. But at least for me specifically, I'm not necessarily trying to see my portfolio go down in price over time, even if it means I'm getting paid a massive amount of cash flow. So that's definitely something to consider when it comes to SVOL, but like we talked about, the strategy seems pretty sound. It seems like a decent alternative investment, at least I think, for my portfolio. I'm never going to make this a massive portion of my portfolio, but for some cash flow and a lot of it, SVOL is definitely one to look into. Now, the last high yielder that I finally have been able to grab a few more shares of, well, it's slightly dipped in price at least, is JEPQ, or the JPMorgan Nasdaq Equity Premium Income ETF. Now, JEPQ over the past trailing 12 months is offering somewhere around a 8 or 9% trailing 12-month dividend yield, which is not bad whatsoever, especially seeing how much this ETF is actually returning price return over multiple different time frames. And like I said, just as of recently, JEPQ is finally trading around $4 off of the most recent high, so it is offering a potential opportunity to buy some more shares. I talked about this in a previous video, but even still, over the 1 year, JEPQ is up 7.15%, and this is all while paying around 9% yield, which is insanity. Year to date up around 5.11, and on the max time frame up around 8.83. And because of JEPQ's holdings invested into the Nasdaq 100 along with the cover call overlay, I think that at least unless anything crazy happens in the market, this ETF will not only continuously move up and to the right slow and steady because of the cover call overlay, but will continue to pay their investors a nice, significant, juicy dividend every single month, which is what they've done historically. Now, I'm of course not saying that JEPQ, that SPYI, and that SVOL are the perfect investment options for you and for your strategy and for your portfolio, but for my portfolio, I'm continuously adding more shares of SCHD, even FDVV, and other high quality dividend growth ETFs. But along with that, because one of my main goals is to get my dividend income on a monthly basis consistently higher and higher, as of right now, that's my goal. And again, that can change in the future. I'm buying a decent portion of SPYI, SVOL, and JEPQ, at least I have as of recently. But now lastly, most importantly, I want to hear from you guys down below. If you were to be honest, out of SPYI, JEPQ, and SVOL, if you could only buy one of them as of right now for whatever reason, which one would it be and why? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.